Let's get right to the question every crypto investor is asking themselves right now, as the markets seem to be on a roller coaster ride with no clear end in sight. Is it time to sell everything and walk away, or is this just another bump in the road for crypto? The market's volatility is both thrilling and terrifying, and right now, signals are mixed. Some days, it feels like fortunes are made and lost in minutes, leaving even seasoned investors second-guessing their strategies. There's no simple answer. Crypto is a puzzle of economic data, tech innovation, and raw emotion. Every headline, every tweet, and every new regulation adds another layer of complexity to an already unpredictable landscape. On one side, bullish trends, like real-world asset tokenization and growing institutional interest, hint at a new wave of adoption. These developments could fundamentally reshape how we think about value and ownership in the digital age. On the other, macro uncertainty and Fed rate rumors threaten to pull the rug out from under the market. Global economic pressures, inflation fears, and regulatory crackdowns are making investors nervous, and for good reason. We need to cut through the noise, focus on fundamentals, and analyze the major players: Bitcoin, Ethereum, BNB, and the rising star, SEI. Each of these assets has its own story, strengths, and risks, and understanding them is key to making smart decisions. This isn't about following the herd, it's about being informed and prepared. Emotional reactions can lead to costly mistakes, but a clear strategy can help you weather even the wildest storms. So, let's break down what's really happening in the market, what the data is telling us, and how you can protect your capital, no matter which way the winds of crypto are blowing. As of November 12, 2025, the crypto market is in a holding pattern. Bitcoin has dipped below $102,000, shaking confidence and dragging altcoins like Ethereum and BNB into sideways trading. Solana's recent 5% drop after losing support shows even strong projects aren't immune. Investors are cautious, waiting for a clear direction. But it's not all bleak. While the majors stagnate, upstarts like SEI are thriving. SEI is attracting institutional players and making bold tech moves, standing out in a sluggish market. This split, majors consolidating, newcomers innovating, is the key dynamic right now. It's a market of risk, but also massive opportunity. Let's dive into what's driving these trends. Bitcoin sets the tone for the entire market, and right now, it's at a crossroads. The recent drop below $102,000 is fueled by weak US demand and Fed uncertainty. Long-term Bitcoin's fundamentals, scarcity, institutional interest, and its halving cycle remain strong. But the $100,000 level is a psychological battleground. A break below could trigger panic selling. Bulls see a launchpad for the next leg up if support holds. Bears warn of a deeper correction if it fails. Bitcoin's fate is tied to macro factors and its ability to defend key levels. For now, caution rules. Watch how it behaves around $100,000. The next move will set the tone for the entire market. Stay alert and ready to act. Ethereum remains the backbone of DeFi and NFTs, but its momentum has stalled. It's stuck in Bitcoin's shadow, trading sideways despite strong fundamentals like deflationary tokenomics and a huge developer base. The bullish case: Ethereum could benefit massively from real-world asset tokenization, driving demand for ETH. But high fees and slow speeds have opened the door for faster, cheaper competitors. Chains like SEI are capturing developer and institutional interest, threatening Ethereum's dominance. In the short term, ETH may underperform as capital flows to more specialized high-growth chains. Watch where institutional money goes. If it favors newcomers, Ethereum could face more pressure. The days of Ethereum being the only game in town are over. Binance Coin, BNB, is tied to the world's largest exchange and its DeFi ecosystem. Its value depends on Binance's dominance in trading activity. BNB's bullish case: as long as Binance leads, BNB has utility and demand, but competition is fierce. Specialized chains are pulling developers and capital away. Institutional money is bypassing BNB chain for platforms like SEI. BNB's future hinges on its ability to innovate and attract builders. For now, expect consolidation and watch for signs of renewed momentum or further decline. In the fast-evolving world of blockchain, SEI has emerged as the breakout story of 2025. making serious waves as the go-to chain for institutional finance and high-speed trading. While many blockchains compete for attention, SEI has managed to carve out a unique space, drawing the eyes of both Wall Street and crypto-native traders alike. Its rise has been nothing short of meteoric, and it's quickly becoming a name synonymous with innovation and reliability in the digital asset space. What sets SEI apart? It's all about specialization. Unlike general-purpose blockchains that try to do everything, SEI is laser-focused on one thing: asset exchange. This means it's purpose-built for speed, efficiency, and reliability when it comes to trading digital assets, making it the preferred choice for institutions that demand performance and security. The real game-changer, though, was SEI's bold pivot to full Ethereum compatibility. By embracing EVM support, SEI instantly connected itself to the largest and most active ecosystem in crypto, opening the door to thousands of developers, apps, and users who already trust Ethereum. The results were immediate and dramatic. Since adding EVM support, SEI's total value locked has skyrocketed, leaping from just $50 million to over $1 billion in a matter of months. This explosive growth is a testament to the demand for a high-performance, Ethereum-compatible chain. But the story doesn't stop there. Even bigger news is that major financial institutions are now launching real-world asset funds directly on SEI, signaling a new era of blockchain adoption by the world's most influential players. Securitize and KIO, with backing from giants like ARK Invest and Brevin Howard, have brought tokenized funds from Apollo and BlackRock onto SEI's network. This move is a huge vote of confidence, showing that the biggest names in finance see SEI as a credible, scalable platform for the future of asset management. Of course, risks remain. SEI is still relatively new and untested compared to established giants like Ethereum. In the event of a major market crash, its resilience could be put to the test, and investors should be aware of the volatility that comes with rapid growth. Yet despite these risks, SEI's momentum and the pace of institutional adoption are undeniable. The project continues to attract attention from both traditional finance and the crypto community, fueling optimism about its long-term prospects. SEI has found its niche in the crowded blockchain landscape and is executing its vision with precision. Its team is focused, its technology is robust, and its strategy is clearly resonating with the market. For anyone watching the future of finance unfold, SEI is the most exciting project to keep an eye on right now. Its journey is just beginning, and the next chapter could redefine how institutions interact with blockchain technology. Real-world asset tokenization is the hottest trend of late 2025, and SEI is leading the charge. As the world's financial landscape rapidly evolves, the ability to bring tangible, real-world assets onto the blockchain is transforming how value is created and exchanged. SEI stands at the forefront of this revolution, pioneering new ways to connect traditional finance with the digital economy. By digitizing assets like real estate and credit funds, SEI bridges traditional finance and DeFi. This process not only increases transparency and efficiency, but also unlocks liquidity for assets that were previously difficult to trade. Investors and institutions can now access a broader range of opportunities, all while benefiting from the security and speed of blockchain technology. The RWA market has already topped $30 billion, and SEI's focus on asset exchange makes it the perfect platform for institutions. Major players are taking notice, as the seamless integration of real-world assets with decentralized protocols opens up new avenues for growth and innovation. Landmark deals, like Securitize's $112 million Apollo Fund and KIO's BlackRock feeder funds, prove SEI's institutional-grade credentials. These high-profile partnerships demonstrate the trust and confidence that leading financial organizations have in SEI's infrastructure and vision. This gives SEI a powerful first-mover advantage. By establishing itself early in the RWA space, SEI is setting the standard for others to follow, attracting both innovators and established players to its ecosystem. Unlike BTC and ETH, SEI's value is increasingly driven by real-world adoption, not just speculation. Its growth is rooted in practical use cases, with businesses and individuals leveraging the platform for genuine economic activity. Tokenized assets on SEI can be used as DeFi collateral, creating a flywheel of liquidity and growth. This means that as more assets are tokenized, more capital flows into the ecosystem, fueling further innovation and opportunity. More RWAs mean more users, more developers, and more value. The network effect is powerful. Each new asset and participant strengthens CI's position as the go-to platform for real-world asset tokenization. CI's growth cycle sets it apart from nearly every other project. As adoption accelerates, SEI is poised to redefine what's possible in both traditional and decentralized finance, making it a true game-changer in the industry. In a volatile market, protecting your capital is everything. First, diversify. Don't go all in on any single asset, no matter how bullish you are. Use stop losses to limit downside. Set your exit points before emotions take over. Take profits after big run-ups. De-risk by converting gains to cash or stablecoins. Follow the house money rule. Once an investment doubles, sell your initial stake and play with profits. Stay informed, but don't let hype or fear dictate your moves. Write down your investment thesis for each asset and stick to it. When chaos hits, review your thesis. If fundamentals haven't changed, stay the course. If they have, exit with a plan, not panic. Discipline and preparation are your best defenses. So, where do we go from here? The market is at a tipping point. Short term, things look shaky. If Bitcoin loses $100,000, expect a broader correction. For traders, stay defensive and use tight stop losses, but zoom out and the fundamentals have never been stronger. Institutional adoption is real. BlackRock and Apollo funds are now live on-chain via SEI. The next cycle will be driven by projects with real product market fit, not just hype. Bitcoin and Ethereum will likely survive and trend higher, but growth may be slower. BNB faces tough competition from specialized chains. The real outperformance will come from projects like SEI, bridging traditional finance and blockchain. Stay informed, manage risk, and focus on fundamentals. The future belongs to those who adapt.